Hello and welcome back to Crypto Saving Expert, where we talk about the latest cryptocurrency news and take a look at the markets so that we all know exactly what is happening. Today we are going to take a look at CoinMarketCap and see what's going on. Let's start sharing the screen. Let's check that this is all working properly before we start today's video. Chat's looking a little bit quiet. And let's get into today's video then. It seems to be working properly. On the coin market cap, we can see, first of all, a Bitcoin is at $22,922 and Ethereum is at $1,624. So we've seen a nice move to the upside. We haven't yet broken that $23,000 level that we are waiting for Bitcoin. Hopefully we manage to reclaim that level in the next couple of days. If you have just joined, please make sure to like and subscribe and press the bell notification button. Let's have a like goal on today's video of 50 likes. We can get 50 likes on this channel. Let's first take a look at the Bitcoin chart and see what is taking place. We are on the daily chart here. We have actually, if you zoom right in, we were looking at this level of resistance from the wick of this candle here. We have currently closed a candle above this level on the daily chart, so that is looking positive. The next level of resistance we will be looking at, the next major level, is the $25,230 level. We obviously have those CME gaps down at $20,000, and we have a CME gap up at $28,000, and they are both acting like magnets for the Bitcoin price. They're what we are watching for right now. I'm sure many of you will be aware if you follow Jordan on Twitter. He is very bullish right now and expecting us to close that $28,000 CME gap. If we take a look on the 1 hour chart and see what's happening with some indicators, you can see that the MACD is currently showing that we have bearish momentum. And it's also showing that we are slightly oversold on the 1 hour chart. Now, we did actually have a breakout on the 1 hour chart yesterday. We haven't yet hit that price target. You can see we had a level of resistance that came down here, and we had a level of support that ran through here. We've had a breakout to the upside. We are now retesting this level on the shorter time frame. Taking a look at the next article, the first article of today's video, in fact, we have European Parliament to vote on new crypto draft law for banks. According to Reuters report, the new draft law, is approved, would implement the remaining reforms of Basel III. It's an intentional set of rules created by the Basel community on banking supervisions in response to the financial crisis of 2008, which aims to strengthen banks' regulation and risk management. So what they are trying to do here is try and organize how much cryptocurrency banks can hold. Obviously, they are threatened by cryptocurrencies. The EU is still pushing for crypto adoption, and even as the EU attempts to develop stricter rules for local banks and financial institutions, it is still pushing for crypto adoption. We reported last year that the Union disclosed it was working on a strategy that would utilize blockchain technology and NFTs to right the counterfeiting of real-world goods in 2023. So we do want to see adoption, and the EU have said they are still pushing for adoption, but they are trying to put more regulations in place. Obviously, we do need regulations to grow in this industry. Let's see what's happening here. Come on, guys. 11 in here. Tap the like button. Yes, please. A little bit of an indication towards tap the altcoin that Jordan is talking about a lot recently. Let's see how Tap is performing today. I've not looked at this morning. We are up 8.48% in the last 24 hours. The chart is looking that it's had a huge move to the upside. I can't see how it's here. You can see here on the monthly chart, seeing a huge increase. But if we take a look, can I slide across here now? If we take a look at the 3-month chart, it was down at those levels for a very long time, but it actually used to be at 25 cents Tap. If we zoom out any bigger, let's see, I can zoom out here. Let's take a look on the year to take. This is the chart we need. It was all the way back in January 2020 that it reached those levels, and now it looks what the pump we've seen right now looks like the smallest little move to the upside, but it's actually been very, very significant. Taking a look now back at the news, let's see what's going on here. Users of Tornado Cash can demonstrate their funds are legal thanks to a new tool. So Tornado Cash was a cryptocurrency mixer. You can send cryptocurrency into Tornado Cash, and then it will send it out to multiple different wallets, and it really disguises where the money has come from when you receive the money back. because it's all mixed up within the mixer, you can't really see where the transaction entered the mixer and where it exited the mixer. So it removes that trail behind the cryptocurrency on the blockchain of where it has been prior to receiving it back out of Tornado Cash. Now, this was obviously used in bad ways for money laundering. People that had hacked different DeFi protocols or exchanges were putting their money through Tornado Cash, and then they were able to transfer that into Binance and just cash it out as normal, because the trail of where it had been and if it had been in malicious transactions was being removed through Tornado Cash. And then there was a whole issue because regulators tried to get involved. I think they jailed the guy that actually developed Tornado Cash, which is bizarre because it's just a piece of code that is deployed onto the blockchain. So now they are trying to show that not every transaction that goes through Tornado Cash is illegal, and they found a way that users can prove that their funds are used not in a malicious manner. So it is positive, but it is all very, very bizarre. Obviously, Tornado Cash is built. You can see the intention behind it. It is used to remove a trail behind where the money has come from. So obviously, people are going to take advantage of that in a malicious way. Being able to legalize your funds over there is good, though, because it can increase adoption. It doesn't mean we need to that regulations are going to necessarily continue to come for Tornado Cash. We can see this is a well-known Ethereum service that protects users' privacy and enables anonymous transactions. The OFAC slapped restrictions on Tornado Cash-related wallets and smart contract addresses in August last year due to suspicions that the services were being used to launder money. So many different transactions that were coming out of Tornado Cash, those wallets were getting frozen. And this sparked doubts that the reliability and security of the system and brought attention to the need for additional safeguards to stop bad actors from abusing it. A Dutch court determined that the developer behind Tornado Cash posed a flight risk and ordered him to remain behind bars until February the 20th. And he has been held in custody since August, just days after the US Treasury invoked sanctioned authorities to target the Tornado protocol, which it aimed was used to enable North Korean hackers and launder over $1 billion worth of cryptocurrency. So here's a quick diagram of how it works. You send the money in, and then the money gets sent out again. And you don't know where those transactions have taken place within the protocol. It removes that trail for your funds. Taking a look now at the next article, please don't forget to like and subscribe and press the bell notification button. We are trying to get to 100,000 subscribers by the end of the year so we can get one of those lovely little plaques. And then we can hang it up behind me. We are currently on 15 likes on today's video. Please make sure to continue liking so we can get up to 50 likes. That is the like goal for today. Taking a look now at TON, we can see here TON validators to vote on suspending 195 inactive addresses holding $2.3 billion in TON coin. So we need to take a little look at this further. This is incredibly interesting. So obviously, $2.3 billion is a huge amount of money. And if those wallets are inactive and their users aren't going to touch them ever again, that money looks like it's in circulation and therefore is depreciating the value of the asset because of supply and demand. However, I'm against this idea. I've thought about it. So we can see here the TON network, this is the website you can see for TON. It's a fully decentralized layer 1 blockchain designed by Telegram to onboard billions of users. It boasts ultra fast transactions, tiny fees, easy to use apps, and is environmentally friendly. We can see here there are 195 inactive miners wallets holding over 1.08 billion TON coin, worth an estimated $2.3 billion at the time of writing. If the vote surpasses, activity in the wallets will be suspended for 4 years. So the team have said through the potential suspension of these wallets, there is a hope that clarity about the volume of TON coins currently circulating will be provided and that the active community participating in the open source project will continue to grow and thrive. So these wallets have actually got their funds from participating in mining which ended in June 2022, and they've never made any outgoing transactions. Now, I think that's perfectly reasonable. I don't think you should push people to make transactions. They may have held onto the token and just thought they'll leave it there for the long term. I don't think suspending their wallets is necessarily a good idea. The vote is scheduled to begin on the 21st of February. It is a follow-up to a December request by the TON network, the TON Foundation, for the owners of the inactive addresses to show some activity by carrying out a transaction on the network. Those wallets that have remained inactive since this call to action are the subjects of this vote. Inactive mining wallets will not be subject to the vote if they are activated at any time before the end of the voting period. Wallets that did not receive Toncoin directly from mining or that have made an outgoing transaction at any time in the past will not be affected. So it's just by those miners that were mining the project. We can see here 75% of validators must participate in this vote. Now, I strongly do disagree with this, unfortunately. I've thought about it for a little while. People have mined these tokens and they've just left them there for the long term, and now their wallets could be suspended unless they make a transaction. You can't just suspend someone's wallet because they're not participating in a network just as you want them to. That is my opinion, but drop your opinions in the chat. That's a pretty interesting conversation to have. I'm sure there will be a lot of different opinions here. Taking a look now at the next article, we can see the price of this. I wanted to pull up the CoinMarketCap and see how this is affected. If we're taking at the look at the 1 month chart here, you can see this hasn't been affected too much. It'll be really interesting to see how the vote affects the price. If the vote does go through, it will be positive in terms of, obviously it's negative in terms of people may not agree with the project's morals, but it may be positive in the fact that the circulating supply is therefore reduced. And when we see the circulating supply reduced, that means that the price is artificially pumped. So taking a look at the next article, Europol says over $1 billion of crypto assets exchanged through Bitzlato are linked to crime. So for those that missed this, I think it was last week, time has been going really, really quick in crypto. We saw a huge drop in the price. It wasn't then. It must have been further down. It was this drop here back on the 18th of January. The US basically flooded the market. They created a huge amount of fear in the industry because they said the Department of Justice is about to do a speech on cryptocurrency. And there was a lot of fear. The price of Bitcoin dumped through this channel. It was an ascending channel here for a very long time. And then the price just dumped. The altcoins jumped because they just put loads of fear in the industry. And then they said Bitzlato, a cryptocurrency exchange that barely anyone had heard about, was doing an illegal activity. So when we saw that, the price started to pump again because we realized they were trying to regulate the space in the correct manner. But the European Union Agency for Law Enforcement Cooperation has said that 45%, I believe, 46% of assets in Bitzlato are linked to crime. Now, this seems a little high, to be honest. 46% through this exchange being illegal activity. This is because the transactions are going across borders, I think through Russia, and obviously then it becomes a problem and something regulators need to sort. Somebody is saying the stream is freezing for some people. That is not what we wanted to see in the chat. It seems to be working fine on my end. I'm not sure. It must be something between YouTube. Hopefully, if this comes back on Play On, there is nothing I can fix at this point, unfortunately. I just hope it's not too bad, and I'll try and get it fixed again before tomorrow. Moving on to the next article, we can see here Gemini to lay off another 10% of its workforce due to bad actors in the industry. It looks like a little dig to DCG here. We can see it comes a week after DCG Genesis Global filed for Chapter 11 bankruptcy. So Gemini, the cryptocurrency exchange by the Winklevoss twins, lent their funds to Genesis, which has parent company DCG, and Genesis has filed for Chapter 11 bankruptcy. Therefore, they can't pay back Gemini in the immediate future. It is a positive sign that they filed for Chapter 11 bankruptcy because they'll restructure their finances and try and find a way to make those payments to their creditors. But right now, obviously, they're not getting the funds that they thought they had, that they borrowed out and were earning interest on. So now they are getting rid of 10% of their staff. We also saw yesterday Spotify getting rid of 6 or 10% of their staff. I put it in my chat so I can take a look. No, I didn't. It must have been on my Twitter profile. 6 or 10% of Spotify got sacked yesterday. And we've seen this a lot on a lot of the big tech companies over the recent months. Hopefully a change in the markets means a change in this because obviously it's Not nice to hear about. Cameron Winklevoss references to bad actors as the root cause of the most recent round of layoffs seems like an indirect reference to the bankruptcy situation at Genesis Global. So that's exactly what I thought when I read this news. He added that Gemini was preparing to take direct legal action against Barry DCG, so Barry is DCG CEO, and others who share responsibility for the fraud that has caused harm to the 340,000 plus end users and others duped by Genesis and its accomplices. So that's what we're seeing in the news at the moment. We've got 2 more articles today for today's stream. We've seen the New York State Department of Financial Services orders crypto exchanges to separate customer funds from their own. So this is obviously off the back of the FTX collapse. We can see here, Reuters reported Monday the financial regulator would issue new guidance mandating that companies separate investors' funds from corporate assets. We've seen Sam Bankman-Fried, the previous CEO of FTX, use customer funds in a way that he shouldn't, trading in the markets, losing all the money, funneling them to Alameda Research, a separate entity. And now we are seeing regulations come in place to stop this happening again. And that is what we need to see within cryptocurrency right now. We need to see the regulators regulate the industry in the right way so that we can continue to grow. But without regulation, we see bad actors like Sam Bankman-Fried create companies like FTX that make a lot of people lose a lot of money. So regulation, in my opinion, is a positive thing as long as it allows the industry to continue to grow. And that is a big thing because a lot of regulations in different spaces can cause a lot of harm to the industry. But at the end of the day, we're decentralized. But moving on to the next article, we have one more article for today. Bankrupt BlockFi to sell $160 million in Bitcoin mining rig loans. So, taking a look further down, Bloomberg reported the development on Tuesday, citing 2 people familiar with the matter. The sources disclosed that the BlockFi began the process of selling the Bitcoin mining hardware loans sometime last year. So they entered Chapter 11 bankruptcy in November 2022, part of the domino effect that we'd seen from all the way back in May when we had the UST collapse. Then we saw Celsius, 3 Arrows Capital. We've just seen this complete domino effect of cryptocurrency companies falling apart and going into bankruptcy. But we have now seen that they are selling some of their assets, moving forwards into this bankruptcy. When companies file Chapter 11 bankruptcy, they are restructuring their finances and trying to pay back as many of those loans as possible. In this case, they are selling Bitcoin mining rig loans. So this is better than when we see the likes of a lot of people have sold their Solana tokens because FTX owned 40% of the circulating supply. If they were selling off huge amounts of cryptocurrency assets, this would be very, very negative for the cryptocurrency prices and the altcoin prices, because we're just seeing this huge amount of selling pressure from all of these different companies that are trying to get liquid funds in order to pay back the people that they have borrowed money from. But in this scenario, it's just Bitcoin mining rigs. So this is much better than directly affecting the markets, in my opinion. But that is really all for today. If you want any of these stories in more detail, make sure to go to our Medium page, cryptosavingexpert.com. Very soon, we will be moving over to the official website, which is looking very, very nice. Taking a look back at CoinMarketCap, seeing what's happening over here. Not much change over the course of the live stream, obviously. Taking a look at this, Bitcoin is at $22,905 and Ethereum is at $1,623. Hopefully, Bitcoin manages to retest that $23,000 level today. We have just had a little move to the downside. We have this level of support we're looking at, and on the daily chart, that is the same level from the previous resistance. So hopefully this level stands. We see a nice move to the upside. As I've been saying over and over again, even if it doesn't, and we see that move to the downside, even if we come and close that CME gap down at $20,000, it's not necessarily a bad thing, because we will see consolidation at these levels. We will build supports at these levels, and that is strong for the Bitcoin price in the long term. And if we're here in the markets right now in January 2023 and you've made it through 2022, we're all here for the long term at this point. So seeing moves to the downside to consolidate and create those supports is definitely not a bad thing. But that is all of the cryptocurrency news today. So thank you very much for watching. And I will see you again tomorrow where we talk about the latest cryptocurrency news. Please make sure to like and subscribe and press the notification button. And I will see you tomorrow.